Hello, everyone. Joshua Hayes at BigWaveTrading.com. If anybody has been watching, which clearly just based on views isn't a whole lot of people, but that's okay. Been watching these video lessons since the June lows, you'll know that I have been talking about a bottoming process. You will know that I have been slowly adding back to my long-term portfolios, which, going to remind everybody, I operate on 4 different time frames, and on the longest time frame, I have done nothing but add to my long-term portfolio from the 2009 lows to, I would say, middle of 2021. So let's get that straight. 12 straight years of doing nothing but buying the pullbacks until about June, July of 2021, after the transitory narrative clearly to me was a false narrative, and that the Fed would at some point start to have to hike interest rates aggressively. So I started to sell off the long-term portfolio, sold off more in October as we made new highs with only 5 stocks leading the market higher. At the time, my only regret going into the lows was that when the Fed actually started to hike rates, I did not go 100% cash and then wait to start buying in my long-term portfolio. Where I started again was at SPY 400. I have a long-term portfolio tab in the Discord room. I let all of my members know about the 9 main focus stocks I was starting to purchase. Again, I still hold them, but I'm now adding. There was one new buy in the list. Purchased those stocks at 480. Told everybody what my game plan was when SPY closed at 380. Told everybody what my game plan was if and when SPY closed at 350. That was where I was going to do my heavy load. Had I done my heavy load where I wanted to at SPY 350, I would have about only 15% of the accounts in cash. Instead, we didn't get SPY 350. And then the game plan after the low with SPY 350 was capitulation bottom for the full load, 100% all in. Fed pivot bottom, 100% all in. Capitulation bottom, by the way, is outflows in the equity inflow outflows, VIX over 40, or equity put call ratio over 1. Now, the 5-day moving average got above 0.85, which is historically a bottoming number. But that being said, none of what I was looking for actual load has happened. That being said, if you've watched those last few YouTube videos since the June bottom, you know that I've been talking about the bottoming process or the possibility that the bottom is actually in. If the reactions following CPI, PPI, the FOMC 75 basis point rate hike, the GDP report showing that we're actually in a recession, and all of the recent earnings reports don't have you, quote, quote, believing that a bottom is in, I don't know what it's going to take. One of the most important tells that I see is why I believe it's quite possible the bottom is in. It's not a bottoming process. It's a bottom. Are a few things. Number one, the bull-bear ratio from Bank of America, the bull-bear indicator, hit 0.0. It can't get any worse. 0.0, Bank of America bull-bear indicator. That's 2008 lows. What's even more surprising, and I really didn't give enough weight to it, I guess, the CNB survey of market participants in 2008 at the low, 56% of the survey respondents were bearish. CNBC just had one, 59% were bearish. More bearish than at the 2008 lows, where we were 48 hours away from you going to any ATM in the United States of America and being unable to withdraw funds because of the systematic complete collapse that was just about to occur before the Fed went ahead and saved the economy because they had no other choice. They didn't even know it was going to work, and it worked. I don't know, man. I'm thinking that load at SPY 350 is not happening. My game plan to reload, by the way, just to let everybody know, I'm only about 33% cash in these long-term portfolios. So they are mainly invested. But the whole point was there was going to be a massive load at SPY 350, not getting it. So now next I was looking for a Fed pivot. We haven't had the Fed pivot yet. I expect interest rate hikes to end this year. By the start of 2023, I no longer think the Fed is going to be hiking rates. And in fact, I expect them to start cutting rates by March of 2023. We'll see if that happens. I also have gone on record, I'm not sure if I've done it here on the YouTube videos or if it's just in my chat room, as saying that the stock market will hit new all-time highs by 2024. Guys, I kind of thought that the V moves in the market were byproducts of QE, even though they really didn't show up until 2018, and we've had QE since 2008. For some odd reason, I thought that these crazy V-shaped moves were going to be a byproduct once we got rid of QE and QT came, that we'd be fine. But it looks like it's just a byproduct of algo. So I'm just thinking about it, you know, just a few stocks that I can think of where they just keep going and we don't get any price discovery, any pull. So for the market, I'm not going to chase it here in the long-term side. Quarterly side is going to remain in cash until I get that Fed pivot. And then I got two portfolios. They hold 10 stocks each, 10% of capital in each name with a hold period of 90 days. I was using 4 portfolios because there were, well, really 3. But one is starting to show some major relative underperformance. So we're just now going to be going with portfolio A and portfolio B moving forward. Those will not get invested again until the Fed actually pivots and or Q4 of this year. I plan to start purchasing the quarterly portfolios again. However, swing side, we're starting to get signals, starting to increase size to a couple of them. Those are starting to work out, so that's great. Intraday, my focus, as always, as everybody knows, remains, look at the list that I have here. It's either going to be small caps, the most aggressive small caps is what I like trading, or big caps with catalyst. You don't see here, but I ended up trading MRNA on the day. And what you're seeing here are lines that I draw constantly throughout the day, always marking up my charts as the day goes along. So getting back to the SPY, because these video lessons like to focus on the longer terms, not the intraday trades. Where do I pick up SPY now? Well, unfortunately for me, there is, I like to use, so this is all just to let you guys know, secondary, tertiary indicators. They're not primary indicators. It's always price and volume. I like moving averages. When we rallied here, I want you to notice the moving average lines. When we rallied here, I want you to notice the moving average lines. Notice here, notice here, notice here, notice here. Now look at your moving average lines. We call this confluence. The pullback came right to all of those moving average line structures and bounced. Volatility stop is below it. We resolved out of a squeeze with green dots. We are triple green on the bottom. This is the first time that we've gone triple green, resolving out of a squeeze with the EMAs squeezing each other. So I definitely think that we have to look to buy the pullbacks. Now, where do I plan on buying these pullbacks? That's where it gets a little tricky. Back in the day, the 50 SMA in an uptrend would be where I would look for a pullback. I've had to change it to the 20 SMA or the 21 EMA. Now the 21 EMAs don't even come into play. As soon as the market broke above these recent highs with all of my indicators confirming that pullback to the 21 EMA on the daily time frame, it did not happen. We did not touch the 21 EMA. There was no additional adds into the long-term portfolios, and now we move higher. So I'm now looking for a few things. You can take your Fibonacci retracement levels, draw it from this low to this current high, and this high has not been set yet. We could be higher on Monday, Tuesday, Wednesday. Once a pullback starts, we can draw our Fibonacci retracement levels. My favorite line is always the 38.2 or the 50. The 38.2 would line up beautifully with the 21 EMA. A pullback even to 395, I'm willing to piece into the long-term portfolios. If by chance I can get a pullback to 390, I'll piece a little bit more, and then the game plan will remain the same on the way down. No major loads until SPY 350, which is not going to happen. I even gave up SPY 350 around this time period here where we started to pull back. I told my members, guys, I don't think we're going to get SPY 350. I think the best I can hope for is SPY 360. At the best. At the best is a double bottom attempt. We didn't get it. Around here, I was thinking, okay, screw SPY 360, I said. I'll be happy with SPY 370 for the load. Didn't get it again. Guys, I don't have FOMO. I don't chase. That's a young man's game or a FU money game. I'm not in either camp. So I have to look for pulls for additional entries for the long-term account. So not only are those levels that I'll be looking at, we'll do an anchored VWAP from the low. The anchored VWAP, if that can line up with the 50 Fibonacci retracement level, there's another great spot. But anywhere at this point now, between 395 and 385, I'm willing to start operations again in the long-term portfolio on the backside. I don't know if this is the ultimate bottom. I don't know if we're going to go into a recession, but I really doubt it. The economy is strong. I traveled on the mainland at the beginning of June before even this last leg started, and there was no sign of the consumer being tapped out. Despite this inflation, this market keeps rallying. I refuse to be bearish here just based on probabilities. But we're not out of the woods yet. I like drawing downtrend lines. Technically, from this high to this major point to here and the 200 SMA, we have all these overhead resistance lines. And if you want to see how noisy it can possibly be during the summer, take a look at this chart. Chart version 7 SPY drawing. So we still have this downtrend line that I connected just earlier, the 200 SMA. I'm sorry. I see that I don't have the 100 EMA. There it is. It's above the 100 SMA, so we're above the 100 SMA. The next area of resistance is this former support, now resistance around the 415 zone. Remember, these are ribbons. I know it's a thin line on these charts, but remember, they're ribbons. They're bands. They're not finite levels. You got to give them some porosity. But we have resistance here. We have this downtrend line that's going to line up with this former support becoming resistance. A lot of price discovery around this area. This will all be lining up around the 425 to 430 area on the SPY. We technically have room to there. And then if we start back testing, if we get above any of these levels, okay? So now that we're below this level, a pullback to here is actionable. You can see that these lines are intersecting here, 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 here. All of these are pullback zones for me for long-term portfolio additions. You can also trade the SPY, SPXL, or SPXX with these levels. You can draw them on your chart. You can also start doing all those Fibonacci retracement levels. You can go from this key high to this key low, from this low to this high, from this high to this low. Start looking for confluence where the Fibonacci retracement levels start stacking on the top of each other. You can do retracements. You can go from this high, this low, to this high, to this low, and see where the 100% of the move is. If it lines up with Fibonacci retracement levels, awesome. So the SPY, I expect it to keep rallying. I'm in the camp that we've bottomed. This is why it's so hard to time the market. In hindsight, I was like, oh, should have sold all here. Should have sold all out when they started to hike interest rates. And then I'll buy it all back at SPY 350. Uh-oh. What if we never see SPY 350 again? What if we keep V-ramping to new highs? Since we now know under QT that the V-ramp moves happen with or without QE. Even under QT, they happen. SNPS. Look at this. This breakout didn't work. This breakout attempt didn't work. This one. But this one works. That's the market we're in. It's tricky, but at least we know the rules of engagement. CDNS. Which V breakout will work? Oh, I guess this one. But once again, we can't get even that pullback to the 10 SMA. Used to be the 50 SMA, like I said. Then the 20, now the 10. Here we go. So we know what we're looking at. We know the kind of market that we're in. If we continue to V ramp like CDNS and the SPY, boy, oh boy, I'm going to really be thankful I didn't go all out with that rate hike. And those of you that are selling, that have sold recently near the lows and are now having FOMO, Wall Street is a transfer of wealth. And I'm going to repeat this to anybody watching this video lesson. And I've repeated this over and over and over. And I say it all the time in my chat room. For your long-term portfolios, anytime the market is down 20%, you must start accumulating. If it goes down 25, 30, 35, 40, 45, 50, 55%, you accumulate more on each dip, knowing that 5, 10, 20 years out, all three of those time frames, following a 20% decline in the S&P 500, the market has never been lower outside of one time frame, 1929. 1929 is the only year that you had more than a 55% decline in a secular bear market. And I still see people thinking that the SPY is going to fall 80%. Guys, SPY falls 20%, you need to start buying. And I hate to tell you it. I've had conversations with people that had massive gains on some of these speculative issues. Maybe not coin. Let's say it's Tesla, for instance. You know what I mean? Like they had, this isn't even good. God, why I don't get myself involved. Oh, Roku. Okay, Roku's a good example. I know people that had massive gains in Roku the entire way up, and they got great prices. Some individuals I talked to had, 100, 200+% gains, and they never took any profits. Guys, if you're ever long any stock in a long-term portfolio and it's up 100% or more, you need to start taking some profits. I don't care if it's 1%, 5%, or 10%. You need to start taking some profits. So I'm going to wrap this video lesson up. Just showing you also JNK. JNK is one of the key metrics that I look at for this market. And I just want to show you JNK is breaking out above this downtrend line. And I told you that under quantitative tightening, JNK was my most important chart. We have a breakout of the downtrend line. We're well off the lows. We're not sitting at the lows. There's no negative divergence versus the market. We'll see what happens, but we're looking much better. Is TNX even available in here? Hold on. Left shoulder, head, right shoulder. We just broke down to the neck trend line of the CBOE 10-year Treasury yield. That's bullish, not bearish. For the market's good, I'd love to give everyone new swing long positions on the quality side, but we still don't have them. That being, at least I don't have any this weekend. I apologize. I don't have any setups this weekend for everybody. But I want to review to everyone what I'm looking for whenever I go long. So we're going to look at some stocks that have been working since I've gone long and see if you guys can't see the same exact patterns that I look for. It's not the greatest methodology in the world, but it works for me. It's profitable for me. And you can ask members, especially the ones that are taking my quote flag names. It works really well. So I'm going to show you some examples of ones that I took that are working, ones that I actually didn't take that I now regret, and then we'll just wrap the video lesson up. But what I want you to notice here is that on this time frame chart, it's a Zoom 4 on Telechart version 7. You will notice that this volume bar is truncating all the previous volume bars with green bob. You will notice this one actually pulls back and violates this low. Keep this in mind. But as it moves lower, what it doesn't have is any yellow bop, negative bop, or heavy volume pullback. Following that volume truncation day, we then get this hammer candle, candle over candle, off the 52-week low on heavier volume, still holding max green bop. I never know if it is going to work or not. You can always go long at the market without a gap up, but if it moves below this low, especially if it closes, if you work on a closing basis, you got to get out. That didn't happen, and it's done nothing but work since getting long. I did not know it was going to work this well, but it is. With SOND, I'll be selling a little bit more at the market on Monday morning, up 50% on the position. I will have a trimming and trailing stop here. I'll have a stop here. I'll have a stop here and a final stop here. So I'm going to take some profits, and I'll have 4 trimming stops. So that way, I can, if the stock starts to pull back, I can at least lock in some profits, but still give some of the position all the way to the original stop level, room to work in case SOND wants to go to 2, 3, 4, 5, 6, 7, 8, 9, 10. So that's one example of one stock working, SOND. So keep that chart in mind, because now we'll move to CVRX, which is another one that's working. This volume truncation happens back here. Look at the volume truncation. Look at the max green bop. The stock moves sideways, holds those lows. Another strong session, right? Another strong session. Continue sideways. Now what I have here, this is what I call a cheater signal. I have an engulfing hammer candle price bar off an uptrending 50-day SMA with the stock not holding the volume truncation low. The strongest stocks will set up, and they will never break that volume truncation low. And we're going to take a look at a few at the end of this video lesson. But CVRX, candle over candle, you can get long at the market or with a buy stop like I do up and through 678. If it gaps up, you got to pause the trade. We don't chase. We wait till it comes back below 678. Then we get long up and through the price. Or if it gaps down, you can reduce your risk by getting long at the market. But this is where your stop has to be. CVRX, get in the next day. That's why you see this white arrow right here. They cannot be manipulated by me whatsoever. I cannot. Once you get past this day and you're like, oh, it's working, I'm going to go add this to the system. It does not work like this, and it doesn't matter. At bigwavetrading.com, you can ask all members, ask us, do whatever you want in the public chat room. Every single end-of-day swing trade idea I have, I not only tell you exactly where I'm getting in, 679, and telling you exactly where I'm stopping out, I'm giving it to every member on my website before I ever place the trades on my end. Everybody can front run me, and you have the exact parameters and the exact levels and the exact risk amount on every trade. CVRX has been perfect. Once again, going to take some more profits Monday. I'll have a stop here. I'll have a stop here. And for now, I'll have a final stop right here. There's no more reason for me to use these levels. I want to make sure that I completely walk away from this trade green. 31% gain since getting long. CVRX, very, very, very nice. CECE. CECE. Here's your volume truncation day. Notice the volume truncation and the max green bop. It moves sideways. Notice this hammer candle. Does the stock ever close below the volume truncation lows? It sure does not. Heavier volume, max green bop, right off an uptrending 50 over the 200. Cheater signal. I get long above 609. I'm long the next day. This one has been perfect. Why? Probably because it held that volume truncation low. CECE, 27% gain in a little over 2 weeks, or 2 weeks. And then the last one I'm going to review is actually a quality signal, and it's the best signal I've received in a long time. That being said, unfortunately, I went in with size, and it was almost a perfect trade. So, right here, volume truncation, no max green bop. But the volume truncation, look at what it does to the rest of the volume bars. Then you get another volume truncation with max green bop right off the 200. We already held the first low, the first volume truncation. I got long the next day. Size. I really sized into this one. And it's been perfect. It's been perfect the whole way, except for one issue. Because of how much I sized, I had 50% of my stops here. And after the day of getting long, Wanted to make sure that if this thing failed outright that I didn't lose a full 1R plus on the trade. So I put a stop at 23.60 and the final stop at the low of the day. The very next day, unfortunately, it ran me by 3 cents. That's trading, guys. Now, let me tell you this right now. If this is an uptrending market where the SPY is already at new highs, where it's already back-tested and the low is so far, 370 is out of sight, out of mind. We're at SPY 340 right now, or SPY 440 right now. I don't do that stop. I only have one stop here, and this was a load in my personal portfolio, my swing portfolio. Nice 12% gain in 1, 2, 3, 4, 5, 6, 7, 8 days. So that's what I want you guys to look at. Hopefully you can see what I see. Hopefully you can learn from these signals. You can look for them on your own. Just look for stocks that have heavier volume than any volume day in the past 9 months to a year. I have a scan that does that. They get on a list, and if they set up again, great. Now I want to review 3 stocks that I didn't take, that I gave to everybody, and I actually hammered the table about. VEDU, first volume truncation here, second volume truncation here. This was the only stock I hard flagged this day for everyone. A hard flag means you guys should take it. I'm not taking it because it doesn't meet all of my requirements. 97% gain. Well, just recently, on this day right here, I told everybody, this one, VEDU, 2 volume truncation bars. We're holding the lows of both bars. We've curled. This was a new long signal that I couldn't take because Bob fell and there wasn't enough of a volume surge. But I told everybody it's my favorite one that day. 2 days later, 20% gain. Or 3 days later, excuse me, 3 days later, 33% gain. Finally had a pullback on Friday. But there was a beautiful setup that I didn't take. Hopefully, we can all learn from it. Another setup, oh boy. Setup that I regret in hindsight. So first off, just to let you know, everybody, on VEDU, I did not say in any other market I would take this long. On this one, I did. So here's your first volume truncation day. Look at what it does to all the previous volume bars. I got to go further out because it's an IPO. But it truncates them all, right? Truncates them all. Truncates them all. Holds that level. Another volume truncation bar. Truncates the previous bars. Looking good, right? SkyX then pulls off this hammer right here. I tell everybody that watches my video lesson, it's in the chat room, reads the watch list page. In any other market, I take SkyX long. In this tape, I can't because the volume 77.3 is lower than the day before. Not bad. 2 days later, 81% gain in SkyX. Given to everybody, told everybody, in any other market, I take this trade long. And then we'll wrap this long video lesson up with the main one, IFRX. IFRX on this day said the same thing, told everybody. Any other market, any other uptrend in the overall market with any other look than this current look, which isn't bad, but it's not good. We're not uptrending. We're below a ton of resistance levels. IWM doesn't look like it's 100% in the clear to me. It's taken out the 50 before and failed. So I can't be 100% sure. And without that volume surge, I can't get long. But I told everybody, this has the look. IFRX, volume truncation. You hold the lows. Beautiful hammer. The next day, it's above the 50. You all know the rest of the story with IFRX. 101% gain. And those aren't the only ones, guys. There's many, many more. SNTI. Guess what was flagged to all of my members on this day? 3 days later, 69% gain. So that's what we try to do at Big Wave Trading. Try to make you guys money. Try to make myself money. If you liked the video lesson, if you learned anything from this video lesson, give me a thumbs up. Leave me a comment if you have any questions, concerns, or just want to say hello. Or if you'd actually like to help me grow my YouTube channel, that'd be pretty awesome. Share it if you're a kind, sweet soul of an individual. And make sure you subscribe if you haven't subscribed. If you guys want all of these trade ideas, all alerted before I take any of the trade ideas, long-term portfolio, quarterly portfolio, end-of-day swings. Day trading is a little different. I still tell everybody on all the day trades that I take, I tell everybody ahead of time, I'm drawing fibs on this level. I'm looking to get long at this support level. Now, if it happens or not, it's fluid. It's fluid. It's dynamic price action, guys. It's not static like all the other time frames I operate on. But the bottom line is, it's available for you guys out there. Discord room, the links to join, 2-week free trial. You know what to do. I love you all. I'll see you next weekend.